Testing 1 2, testing 1 2. Just doing a little microphone check here across the different streams to YouTube, Discord, and the Parsec screen share stuff here. Yep, Parsec stream is good. All right, yeah, that one's almost instantaneous. The other ones do have a little delay. We're gonna get rolling here in just a few moments, and we'll be streaming through, I believe, the announcement of any kind of a rate change, if there is one, or of course an announcement of no rate change, and we are going to keep this one a little bit on the shorter side today. So go ahead and let me know if you can hear me in the chats. Still waiting on the Discord and the YouTube chat. I do see that there's quite a few people in there, not necessarily chatting right now though. Okay, thank you guys. We're going to go ahead and bring the music down here and get started in just a moment. So let me get this under control. All right. Let's get this rolling here in just a moment. Hello and welcome to Market Madness Technical Analysis Wednesdays. We have an FOMC rate decision today. We are going to take a look at Bitcoin here. We will also look at traditional markets, Dixie, and gold. Now, we will be streaming when those decisions come in, and I might be streaming through to Jay Powell's talk. Not quite sure. I believe that begins at 11:30 my time. So let's go ahead and get this underway. We're currently looking at a 30-second chart here on Bitcoin. And let's go ahead and bring this over to the one-day chart. Oh, that's a mess. There we go. Much better. All right, so Bitcoin is currently pushing up against the upper second standard deviation of the Bollinger Bands here. I believe it's trading slightly above. Let's go ahead and take a look here. It is. So the upper second standard deviation of the Bollinger Bands is at 27,220. It is oscillating around as price is passing it above and below. We did get a closure yesterday above. That did kick off a little bit of re-expansion of the Bollinger Bands. We saw some slight contraction as Bitcoin got rejected the first time, testing up to the upper second and third area. It held above the upper first, and that has resulted in BBWP expansion, in this case, to the upside. And of course, I say this all the time, the upper second standard deviation and the upper second to third either act as reversal areas or continuation areas. Now, in this case, because there is a local high on a close very, very close to price action here, I would be very cognizant of any kind of rejections at around 27,700 to the wick high here at around 28,200, which, as you can see, this would look like this, in my opinion, if we were to get upside expansion and then start to look for a possible reversal or swing fail. That's going to come right in this zone up here at the weekly at 28K to the dailies just above at 28.4 to 6, which would be in and around the close open to wick high here at 28.2. That is provided that Bitcoin can recover this daily on a close at around 27.5 and take out the close open structure here from late August at around 27.7. That's where I would be looking for expansion up to that weekly at around 28K. It's more like 28.1 where the weekly actually is. It's $28,070 and possibly even further up, throwing wicks into that daily just above. If we did see continuation above there, I would look for aggressive expansion up to this daily, and this would be a daily low. Now that's the daily low of the range above. We can see that this area here at the daily support zone, this is actually this wick over here at 28,473. And that was wicked. It got a nice pop up. We had tried to recover these wicks here, this wick and this wick here at 29.4 to 5. This would be the next big zone above 28.4 to 6, would be this low at 29K. If that's recovered, then I'm looking up to that 29.4 to 29.5 breakdown area. Kind of created this little bit of a redistribution structure. And then we can start marching our targets up to this weekly. This is the very, very important weekly. After putting in the high at 31.8, the weekly at 30,300 or so. It's actually 30,326, but that would be the next big area above there. I think we run those highs of the range above and possibly higher. Now, that does not mean that I'm necessarily looking for this to result in a breakout to the upside. There's still obviously a lot of overhead resistance to get through. And on the flip side of that, if Bitcoin does lose this monthly right where the upper second standard deviation is, then I would be looking to this weekly here at that 26,750 where the upper first is coming in. Now, to be fair, the upper first is slightly below at 26.7, so you can give it some room. I wouldn't want to see closures below there, though, for the bulls unless they can hold the close open structure here at around 26,500 to the wicks low, to the excuse me, the wick low even at around 26.4. Below there, I would be looking back to the basis here at 26.2, and I'm going to show you why in a moment. This is a very important area at 26.2 and the basis here on the daily. But below there, I would be targeting the 26K weekly down to the lower first at around 25,650 or so. And if that was lost, I'd be looking right back to the lows by the lower second in this daily support zone at around, you can give it some room to be quite honest. This is currently at 25.1, but I'd be looking more around 25.3 to the bottom side of this daily support zone at 24.8. And this was, quite frankly, such a big area. You know, we did see a nice first pass bounce after dipping in there. And, it did result in almost to a T what we were discussing, right? The end result of this move into that area turned out to be a wick, closures above, and then march right back onto the upside near, basically running the lower second standard deviations right back to the upper second standard deviation. So realistically, when looking at this particular pattern, and this low, the most recent low that was set, what would I want to see? as a trader, I actually wouldn't want to see this necessarily break out above 27.5 and swing this high. What I would really want to see is a pullback from here to a higher low, even if it was local, and even if it dipped right back down into this basis and weekly area, to then, get a higher low and then try to bounce up and actually clear these levels. I think that would give Bitcoin a much better chance of not getting a strong rejection. I do feel as though if Bitcoin were to just march straight up through to the $28,000 area, for instance, and mid $28,000 area, maybe even into the 29s, we're going to see some pretty volatile rejections in those lower term time frames. Now, of course, my current swing long wouldn't hate that at all, but in this case, for the integrity of a move up that can actually have a chance of taking out the range above, I really would want to start seeing some higher lows here, some real bullish structure being built. As it stands right now, this is all just a big mean reversion. Yes, this is a trend break because this was a lower high over here at around that 26,460 with the close coming in there at 26,276. So we did see the lower low to the higher high break. So we did break that downtrending structure. Of course, there is longer term time frame structure that is pointing to this still being an intact downtrend. So that's where we would want to see the daily start to dig out, put in a higher low, and start creating that structure on the way up. Now, when looking at this daily, one of the reasons why I'm pointing out the 26,500 area, or 26,200, I'm sorry, at the basis is because that is actually a 50% fib retracement from the current low, or current high to low rather. So this is a big area. Below there, the line in the sand for the bulls to really put in a strong bounce would be around 25.8. Now, the lower first is realistically from a volatility standpoint, the line in the sand, and that is falling right at the 272. But if you really want to see a nice bullish bounce, it would come above the 50% at the 618, which is currently coming in at 26,500. Basically, the close is right here. There are going to be some that call this a high to a higher low already, and we already are building structure. In my opinion, this is a consolidation low. It's not the type of daily impulsive structure that I want to see to break this most recent high by the 1272 up here at that 28,200 area. And you can see that the fibs line up very, very nicely on from this high to low retracement with extensions. We got the 1272 at 28,200. We have the 1414 coming right in line with the daily overhead resistance above the weekly at 28,4 to 6. Right there at around 28,576. Above there, we have the 1618 coming in right above this low at 26,100. We have the 1786 coming in at that 29,500 area. And then, of course, there is the venerable Torx 1888 up here. We also have this 888 that Bitcoin is currently trading at right now and closed on yesterday by the upper second as well. But that's coming in around 29,800 or $30,000. So not very relevant up there until we actually see a breakout above the local high, start clearing this higher high up here, and then get through some of that overhead resistance. This is going to be a pretty interesting week, I think. When looking at momentum on the daily, you can see today's Wednesday. I do favor the Wednesday into Thursday reversals, and at least in the lower term time frames. As it stands right now, Bitcoin still has stoke pointed to the upside here on any closes above 27,100. Now, this is going to get a lot of people bearish if it does turn. But let me remind you, we just closed a 2-day yesterday, and the 2-day cleared the basis band. Logical area to tap on next is this upper first standard deviation of the Bollinger Bands around 27.5, which is the area to clear above. Above there, we can move those targets up to the upper second standard deviation, and that's coming in at another major area at 28,500. So you can see that this is really lining up with our charts here, and I can show you here on the Bitcoin in 60 seconds chart. Upper first on the 2-day lining up with that daily overhead resistance. Upper second lining up with the next daily overhead resistance above that weekly area that was tested. Excuse my voice as I struggle to talk here. Now, this is where the daily gets interesting versus the 2-day, because the 2-day is going to remain with upside here on Stoke or close over close momentum. This is not a Stoke RSI. It is a regular Stoke. And in this case, the pivot is 25,200. So it's right there at the low, basically, on a close. And when looking at the 3-day, we can see that the 3-day is pivoted at 25,460. So mid $25,000 area. And this is where we can see that Bitcoin is pushing up against the basis band. And we can see that the upper first above there is just about lining up with this low over here at guess where, $29,000. It's amazing, isn't it? Bollinger Bands and standard deviations of Bollinger Bands when you're using a 20 simple will often line up with those very important areas, which gives you the bias that if it is broken through, you're getting continuation. If it rejects, you're getting a reversal, because it typically will line up with support and resistance. It's a well-tested setup. So in this case, that 3-day is also going to be pressure up. So 2-day, 3-day pressure up. And guess what? The 4-day is also going to be pressure up, and that's at 25,431. We can see that there is a ways to go tap on that basis, and I do favor closures above the lower first to go tap on the basis. The basis is currently right around that high. Guess where? 28,100 to 200 area. Above there, we can see the upper first is coming into that $30,000 area, nearly at this close open of this little bit of a lower high. This was like a consolidation lower high, and then down to the lower second standard deviation. We did get our beautiful drive down towards that lower second after poking at it a few times here on the 4-day as well before the nice bounce. I've told you guys many, many times, I love this type of a setup. We get expansion, for instance, on the 3-day through the lower second and third, and then come back down and try and tap on that lower second again, or at least drive towards it, swing the low, and then bounce. This is one of my favorite volatility setups in all of trading. We didn't quite see it on the 2-day, but the higher term timeframes, as I had mentioned before, had more of more of a pinch on the Bollinger Bands instead of a range. Now, when we get here to the 5-day, we have this range still kind of beginning. And one of the things that I do like to see after a move off of the lower second area or zone on something like a 5-day or a weekly is a move down to that lower second standard deviation. And it did drive lower towards it, but we were getting expansion to the downside. And now that Bitcoin has closed a few 5-day candles, we can see the lower second is beginning to curl up, helping to define that low a little bit more clearly. It is sitting below there, but it's right in our zone at the 24,800 region. So if that area is lost below the lower second, this is downtrend intact rather. The basis, of course, is here at 28,200. So Bitcoin right now does favor a move up there from the lower first. But we got to take a look at this 5-day. 5-day has an initial cross to the upside. The number to keep this turn to the upside here on the 5-day is 25,820. And guess what? This is going to be a big Friday. So we've got the 5-day close, but before the Friday close with the 5-day here, we're going to have a 4-day close, a 3-day close, and a 2-day close to talk about in Friday's live stream. So we'll have a very clear picture of what's going on in the timeframes below the 5-day on the day that the 5-day will be closing. Now, of course, we won't be able to talk about that until Monday, as I'm streaming Monday, Wednesday, Fridays. But you should see this on the Friday closure coming into the Saturday candle, and that's going to inform the weekly here. And I've said this before, even though the weekly, is ugly, it is lower low. This is more of a setup where it's more ranging activity unless we had breached and closed below the lower second. And in this case, that's at 24,435 right now. We did not. We tapped on the lower second back here at that 25,200 area. Went sideways, swung that low, recovered above the lower first here, which is at 26,200 or so. Again, big area. That's that daily area, that 50% fib from the current move up from that low. And we can see that Bitcoin is favoring still a move to the basis band. And this currently is at around $28,000. It's $27,900 currently. Now, this is going to be big when taking into account how the 5-day closes on Friday, because the weekly here is at 27,300, and Bitcoin has tested this momentum pivot, in the past 3 days on a wick. If we do, of course, we are going to see this continue down. If Bitcoin does close above it by Sunday, then I would be looking for a cross back to the upside, and then we get to watch for the next weekly closure coming into the monthly and quarterly closure. Now, again, we will talk about this coming into the monthly. Monthly pivot is currently at 22,230. That is going to move up. And this is frightening a few people who track momentum pivots, because it's within, it's within range of Bitcoin's volatility expansion to the downside, which would then turn the monthly and possibly, go run that major low that was put in at the beginning of the year. Now, in this case, I would caution those who get too bearish to go and look at the quarterly, because this is going to be the big one to watch coming into the end of the year. Yes, it will still be pressured down, but if Bitcoin maintains above that monthly close over close coming into the fourth quarter close into Q1 of next year, the quarterly is likely to be, in this next tick, it's likely to be within range for Bitcoin to hit, like within the local range. And in fact, already is, but that's the range above in terms of historical price action this year. But it's going to be most likely somewhere in the, maybe mid $20,000 area, 25, 26, 27, maybe 28K. We'll see how quickly this drops. But I will tell you that when this first crosses back up, that's going to be your first sign that, that monthly does turn. It's likely either to get stifled before a full cross, or, we see a nice move down, and it's probably going to signal that you should probably look at that as a good opportunity. Of course, we'll cross that bridge when we get to it. Let's go ahead and look in the lower term timeframes. We'll turn on the volume-based swing fail continuation chart that we've been building for, the past couple of weeks here. And when looking at the 15-minute chart currently, we've got a nice little uptrend. There is quite a bit of bearish divergence building here. I will go through the daily as well and show you that there's some bearish divergence there as well. But we've got our move down here, and our swing fail and continuation area chart was built off of this move down from the failed high to this low over here, the lower low. And this has been working very well. Let's actually get the right chart here. And there we go. Let's turn that on. And we can see that full chart. Right now, I just have the lower alert levels on, just in case we're streaming and it just happens to violently dump out, as we are about 10 minutes away, I think, from at least getting notice of what the rate decision is going to be. And then at 30 minutes past the hour, it will be Jay Powell's time to speak, I believe. I think I have that right. Let me go actually look while we're waiting here. Let's get this chart actually a little bit more lined up here. Let's go. All right. And we can go look at Forex Factory. And okay, so today, well, it would help if I had the right time zone, huh? Let's go to my time zone here. All right, so Fed funds rate 11 a.m. Press conference at 11:30 my time here. So that is yeah, we're gonna get a rate decision here in a few moments. So it's expected to, the forecast is expected to be no change basically, and we can see that I had spoke to you guys on Monday. Where were we on Monday? Yep, Monday on this move up. We saw Tuesday it moved up again to around that 27.5 area. And I had previously noted when showing you guys this chart from the move down that I didn't mark some of the other high volume candles because they're down here. I wasn't marking the low of the range because there's no need to mark the low of this breakdown range because we were marking volatility expansion on higher volume. And once Bitcoin, I noted, once Bitcoin broke out above 26,900, it's pretty much a straight shot right to around 27.4 to 27.5. We did see a sell-off after that, right back down to 26,650, retested 26.9, bounced around a little bit, higher load its way back up. Once it breached, came right up here to around 26,460 or so, came down, found support at that 26.9, ran it again right into that zone around 26.5, and then has just been chopping sideways ever since. So this is going to be the big areas to watch. And of course, these also line up with some of our major levels. Obviously, 27.2, where Bitcoin is currently trading, is right around that monthly. And the 27, 4 to 5 area is that daily zone that we've been talking about, just above the monthly. So above 27.5, then it's, we can look back here to the highs as there was quite a bit of high volume on this high area over here. We can see that there was this high volume candle right here that was defining the top here around that $28,200 to $28,000, and that was coming in at that 27,700. That nice high volume candle was the highest volume that we had seen in, well, a very, very long time. And so it was a pretty major rejection. Once things fell apart below there, it was a pretty easy short position, especially, from that swing high. You get into a swing position and then kind of track it down and even take out another position on that failed short, as we had already previously discussed. So the biggest thing that we can see in the local range here, it might just be better to delete that and then come over and take a look at our volume-based swing fail and continuation chart here. And we can see that locally, in context, we do have some higher volume rejective areas overhead. So as soon as these high volume bars, of course, this came in on this low, pop price back up, but there was a high volume bar here on the highs here. So kind of defining this high that has been swung a few times into that overhead resistance. Once this area is cleared, and then this next high volume candle, which was right above, right to around 27,500, I do think it's clear sailing to around that $27,700 to $28,000 minimum, maybe even 28.5 at the daily above there that we've already discussed. So let's go ahead and switch this back to a daily. We'll go ahead and throw on Bollinger Bands again, and we're going to take a look at traditional markets real quick while we are kind of moving fairly quickly here. Let's go ahead and look at Dow. Dow looks, like I said, looked like it was going to start chopping around. We have our meme trend line there. To me, doesn't mean a whole lot. It's more about the volatility expansion. We did see, a wick into that lower first, in between the lower first and second standard deviations to the downside. Nice pop back above the basis here. If it does close like this is going to be a low set. I do want to see a closure above this wick over here, right where price is trading, basically at 34,725. That would give me the bias that Dow will have a chance to not only test this upper first around 34,800, but maybe even this high above it by the upper second at 34,900, $35,000 area. If it can clear that, I would be looking for expansion up a little bit further to this next wick high by this low over here at basically 35.1. And then the little bit of a failed lower high area on a close up here at around 35.3 to 4. So that would be my take on the daily here for Dow. Dow is, kind of flip-flopping around on daily Stochk RSI. Now let's go ahead and take a look at the 12-hour though, because that's going to be pretty interesting. It's looking the same. Let's look at the 4-hour. 4 hours looking at a cross back to the upside here. That's going to close in 2 hours. So we're likely to see some, I've said this just about every FOMC meeting and then nothing's happened, but we're likely to see at least a little bit of volatility. Maybe not. Maybe the volatility is already out of the way in those lower term timeframes after the quarterly and expos that came up last week, getting ready for this upcoming quarter of price action. So, and that would be the quad witching that has already passed. Of course, there is additional expirations throughout the weeklies and coming into the end of the year and fourth quarter. But in this case, look into that upper first. If Dow can clear it, then looking pretty good. If not, I do think this would set a technical low. It's already being called out as a technical low. It is not closed yet, so that could change by 1 p.m. my times, which is the close. Now, NASDAQ not looking as nice as Dow. It did lose its meme trend line, but it did get a nice bounce off of the lower first standard deviation here. If it can close above, which of course it is trading much further down. This was the open today, was right here at around 15,225. Now, if it can, recover when it does recover, if it does recover above there, that would set a low. I'd target the basis band right around the wick high here at around 15,275 to 15,300. Above there, I would raise my target slightly. That would be the 15,300, but then we're looking to the upper first again around this closing high at 15,400 to 500 area. If we do see a rejection and breakdown, I would be looking at that low by the lower first here at between 15,100 to the low here at 15,069. Below there, we're looking to the lower second here at 14,900 or so. That is also going to be in line if it did break down with this Stochk turn to the downside. 12 hours should be looking around the same. 8-hour is also the same, still pointed down. 6-hour has an opportunity to turn above 15,150, but it is not. It's not the strongest signal. 4-hour might be getting an initial cross. It is at 15,175, currently trading slightly below there, though. There is about 3 hours to go here. So that's going to be interesting to see what happens with NASDAQ here. As it's not looking as strong as Dow. Neither is SPY. Now SPY, of course, again, got that dip into that lower first and lower second zone here in that green zone. Got a little buyback, a little bit of a morning star reversal setup that is being tested right now, as we can see. It looks like we have ticked over and gotten that rate decision. Let's see if they have. I think that they just got that information early because there is no change. So it looks like no change. Let's see. Let me go over here to see, to look at FOMC on Twitter just to verify. Not seeing anything right now. Yep, paused rate hikes. So, yeah, no rate change. not really anything crazy. We are seeing the market react to it, obviously, because everybody's waiting to hit their green and red buttons right when this comes out. We can see that if this low is lost on a close today at 440, I would be targeting the lower second here on the daily at around 437. Below there, I'm targeting the lows at around 433 to this area down here, this support at around 430 to 432. That would be an ideal area to be looking to the downside. If SPY can recover and trade back above 443, then I'd be looking for a move up to around 444, 445 here. Above there, I'm targeting the upper first at 450 or so. If we do see any closures above there, the high here locally is at 451. Next big area to target to the upside on any price action above there is the upper second at around 453 or so, just above this this line here, which is a resistance, or it's kind of a support resistance zone. Now we can go back and take a look at Bitcoin and see what Bitcoin's doing, and then we'll get on to Dixie. And something that we've been tracking for quite a while here is beginning to show itself on Dixie. Let's go ahead and look at Bitcoin. A little bit of a reaction here on Bitcoin. Of course, downside stoke on the 15-minute, not that big of a deal. If it's just consolidating within this range. Seeing a little bit of volatility come on the board here, but it's not anything too crazy. This is kind of a nothing burger move so far for this rate decision. The candle is moving quickly in the lower term time frames. We did see basically a low on the 1 minute put in here on this candle, but nothing nuts. Trying to take advantage of the lower liquidity within the markets right now is likely what we are seeing. And what I would draw your attention to now is after kind of taking a look at Bitcoin, I'm sure that things will continue to move as Jay Powell gets ready to speak here. Let's go look at Dixie, and we can see that Dixie did, in fact, get a second drive of bearish divergence here on RSI. That is confirmed, but when looking at Dixie, it's still doing the same thing that it did on the first drive. So I would like to see an additional drive of bearish divergence. Doesn't mean it necessarily needs to happen here. But Dixie hanging on to this breakout region right here at around 105. So it did dip down and test around 104.69 at the support there. That was one of the areas that we were looking at on Monday. If it does get back below there, then I'd be looking down to the basis at that 104.50 area and the low at 104.42. Below there, then I start targeting the 104.30 to the lower first here at around 103.90. This is a pretty strong lower term time frame pullback. We've seen, closures continue on this little consolidation high, come in around that upper first standard deviation, where this candle is currently trying to push up through again at 105.15. If it does trade above 105.43, then we're looking to our upper second standard deviation coming right into the golden zone here at 105.78 to 105.88, basically 106. We could very well see a swing of this area. I would not be surprised. So let's go ahead and take a look at momentum though. So above 105.10 for today, we still have upside momentum on Stoke. The 2-day is going to be closing today as well. And this is where things might get a little bit interesting coming into the following 2-day closure after today, of course. This is, there's no high here yet. And in fact, even closing below the 105.22, 105.02, the wick low over here, wouldn't be doing much. Need to see the 2-day breaking down below this open here at 104.57. And the upper first needs to be lost to then go test the basis down there in the mid 103 area. Now the 2-day is still pointed to the upside. The momentum pivot for the 2-day here is 105.27. and we can see Dixie is still trading right around it. Now, if it does close below there, that would just be an initial cross to the downside. We don't yet have any bearish divergence on the 2-day in this local trend. Now, there would be longer term bearish divergence, of course, but and in fact, it'd be coming from over here, this higher high. But if it does get breached and closed above, then it's nullified. So just be aware of that. The 3-day is going to be closing in 2 days. So what we've got, or well, with today's closure, it's going to be closing on Thursday's candle coming into Friday. So we'll check up on this on Friday. But that momentum pivot is still up there and still below the current trading price at 104.84. Still looking strong up here. No initial cross down. Of course, that 4-day and 5-day are going to be upside angled as well. 104.24. 5-day is 103.76, and I believe the weekly should be the same. Yeah, 103.76. So until we start seeing, the 2-day, 3-day apply pressure down, and even then, the daily needs to turn down and start putting in another high on the daily chart with, I would hope, some more bearish divergence for the bulls. If you're bearish and this continues up, well, guess what? You're probably going to be in a good position. If you're bullish and this continues down, it's usually good for the risk-on assets like Bitcoin and most stocks. So that's going to be Dixie for you. We'll check up on that on Friday. Let's go ahead and take a look at gold. Gold with a beautiful move. It's hitting all of our targets. It's playing very, very technically here on the daily. After that move to the lower first, and we have a bit of a downtrend break here. So this is, in my opinion, you're going to see a lot of GAN swing indicators or swing indicators. Doesn't necessarily have to use GAN principles, but however you have them structured, you have a consolidation structure here. So you had the low, lower high, higher low, higher high, and then a higher low, lower high, lower low to higher high, which would be consolidation. Now for me, I'm taking the closes. This is one move on a close. So this would be your move up to the lower high. This is your move down to the higher low. And then we have to break out above this high on gold at 1952 to then really get a confirmation of a full trend shift. Now you're going to get wicks taken on the swing indicators. Most swing indicators, this is a free one. I don't even know where I found this. Just it was GAN swings. I don't even think it's labeled GAN swings, but in the way that I evaluate this which would be on a close because of the way that spot markets work and gold trading works. I would be looking for, well, let's go ahead and see if I can get the right tool here. They moved everything on TradingView, and it's been a couple weeks and I'm still not used to it. Here's the path tool. So be looking here, right? And then we want to see this taken out, and then you go and start changing that trend, right? So that would be your trend change. Right now, this is just a consolidation. If it does break above this high, then we have a nice trend change. And looking for, momentum to follow through with that. And the daily is 1907 is the daily pivot. 2-day is going to be 1913 pointed back up. Good, good, good. 3-day should be turning if it loads. 1930. Yep. 4-day is turned back up. 1906. Beautiful. 5-day 1891. Beautiful, beautiful, beautiful. And the weekly, of course, at 1891. So we have agreement across all the momentum pivots here. So I would be favoring expansion up to at least test 1950. And then if it does break out above there, that would be your confirmation of follow through. At least, that is a low right around there at 1955, but then targeting around that 1960 to 1970 area. It's about $10 higher. It's like 1960s over here. Got 1965 on the close up here. Wick high at 1970, 1972. Above there, we've got the 1980 area, and then of course the 1990 or 1987 in this case. That would be the primary targets. Would be just looking over here at these highs. Need to recover this low here first, right? Once that low's recovered, then we can just target in order those highs on those lower term time frames on closes, and then the wicks on the way up. And of course, if gold does fall back below the basis here before taking out this high, that would be a lower high, just indicating more consolidation. The basis is currently at 1925. To the lower first is kind of the main area that I'd want to see hold on gold to favor a continuation to the upside if a high is put in somewhere around here below this 1950 high, and the lower first is currently at 1915. That all, even down to the lower second on the daily, would still favor some of those higher term time frame pivots like the 5-day and weekly. And that's going to be favoring some pretty good upside on gold if it can continue to push on through. Maybe we end up seeing 2K before the end of the year, maybe even higher, if it does get that turn and start to get a break out of this consolidation structure. So that's going to be gold. Let's go ahead and round back over to Bitcoin again, and we can see that Bitcoin's done a whole lot of nothing. Maybe it'll wait for Jay Powell to start speaking, and then we'll see some movement. This is a fairly high volume candle in relation to what we have seen in the range recently, outside of the most recent rejective high up there. And that was put in on the actual high at $1. It's actually 85 cents below 27,500 at 27,499.15. So let me go ahead and turn off the Bollinger Bands. We'll watch this chart on some lower term time frames, and I'll jump in the various chats that we have going on here and answer any questions you might have. We will also take a look at some requests that I have gotten throughout the week. I kind of got a backlog of requests for things to look at. We'll turn on a 30-second chart. I know some of you guys are degens and love this 30-second chart, so let's go ahead and keep it on the screen for now. And, break out above this little high right here, just to do a little bit of quick analysis. Break out above this high right here, and that's coming in at 27,226, and we could see a run of this local structure up here in the 27,300 area, and then maybe it starts climbing its way up. That would be interesting to look out for. I will say it's probably getting up there. It's going to put in a little bit of a local high here after the 30-second consolidation here. After this higher volume low came in. Look at all that volume. It's actually not a lot, relatively speaking. All right, let's go ahead and get the tunes back on here to cover up for the pauses as I read the chats. I really do need to get someone to help me read through chats or aggregate any questions, but that someone's going to have to be someone that has access to the prop shop over there. All right, so let's go ahead and get some Sky Chariot here. Synthwave from Streamlabs Music. Their little built-in music player going on here. Let's go ahead and turn that up. And I'm going to turn on my monitor here so you might hear the music come through because I want to make sure it's not crunchy like it usually is. Oh, it's just me speaking. I don't want to... All right. I don't like my voice, as it turns out. You guys can let me know if the music... sometimes the music gets a little broken up because it is streaming from their servers to me and then restreaming back out. So you can let me know if there's any issues there. Let me scroll through some of these chats. Hey guys. We've got congratulations, Jimmy. Congratulations. We got a new Series 24 over there. Excellent. Excellent. Went in and did the exam today and passed it. Beautiful, 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 beautiful. Wonderful. Congratulate him for me, Jimmy. That's great. Yeah, no names. No names. Sorry. Just you, because nobody knows who the hell you are anyway. Even half the guys there don't know who the hell you are. For those of you in other chats, Jimmy's works over in a prop shop, or otherwise known as a trading firm, and he's he's basically like their training lead. So a lot of guys that are already certified don't need to get trained. They just get an orientation. They go and meet with the risk management team, and then they're on their way. And he just basically is doing their paperwork. But for these guys, he's actually sending them through their training. So ETH, BTC, and BTC dominance we got from Bobby over here. He did ask me about this one earlier in the day. ETH, BTC, we can go ahead and take a look. I think I already have it on the chart here. This is a giant mess because that's Bitstamp. That's why it's a giant mess. Let's go ahead and get a better ETH BTC chart. We'll go to Coinbase, which is also a freaking mess. I guess Binance is going to be the most liquid in this regard. And we can see that, oh my God, that's ugly. Oh, that's ugly. Bitcoin dominance is doing well then. But you know, this is because, you know, ETH has just been in a little bit more of a, when you look at the ETH USD chart, it's been in a little bit more of a broadening wedge pattern in terms of its highs and lows. And this is expansion to the downside, quite honestly, in the ETH BTC pair. And I'm not seeing volume come in on the other side. You know, breaching below this higher volume wick low in the daily is favoring, you know, a little bit of expansion down to, you know, we could see it expand all the way down to about 0.577 Satoshis. So it's doesn't look great as it is getting expansion, but just remember that it can close below the lower second, and once it regains it, then you're targeting the lower first here, and that's at about 0.06112 Satoshis. So what we're looking at is basically a breakdown from this consolidation that lost the wick low and this low over here. So it's getting some a little bit of more volatility to the downside. Now it wouldn't take much to turn this back up. 06046, and that is going to be basically, I think, above this today's wick high. Yep, that would be back above today's wick high, and you would see a daily turn for Stoke. Let's look at the 2 days, still pressure down below 614 or 0614, 0629 on the 3 day, still pressure down, 0628 on the 4 day. 5 days going to be, and by the way, this is 4 day expansion. If it closes here, this is compression to expansion. So this would favor a further downside move. You know, this could even end up at 050 and be not as bad, actually. So it might get expansion down into this lower second. If it does close below, then we're targeting this low side structure over here at that 05 0569, 057 to the actual low at 054, and maybe even that wick at around 050. As it stands right now, it's still pressure down below 0613 rather. And we can see that 059 is that lower second on the weekly. It is getting no real expansion to the downside here that I'm seeing that's, you know, worth talking about just yet on the weekly. It's more about some of those medium-term timeframes to keep an eye on. I would say that your leading indicator is going to be the 12-hour and daily here. So the 12 hours at Yeah, well, the 12-hour is still expansion down. So this could go on for a while, but if it does recover above the lower second here, which is at 0.6015, and the momentum pivot is 0.600. Yeah, basically, if it recovers the lower second, buy close today, then I would favor a little bit of a stoke turn. And for it to try a little bit more upside, but losing this wick low was the killer right there at 0.602. So that's going to be my take on this, and this likely coincides with Bitcoin dominance going up. I haven't been checking on Bitcoin dominance that often. It's a little less important to me right now, but I suspect it's been bouncing off of our main area for a while, and it has. So yeah, Bitcoin dominance after the breakout is just, had a nice higher high. Now it's in a consolidation structure. This is actually a little bit more bullish than I suspected, at that angle. Yeah, I mean, maybe it comes down for another swipe into that support area below 50% or around 50%. It's 48.92. It is up against the upper second. I mean, it could just keep grinding though. That's the big thing with Bitcoin dominance, is it can just keep grinding that upper second and then impulsing. So in this case, let's get rid of volume. I don't really care too much about the volume on this, but there's an argument to be made that this is a falling channel, and statistically they more often break to the upside. That can really be verified on the higher term time frame. So above 49.5% or so, 2 days looking for further upside. And in fact, we could even see a move to that upper second standard deviation here at 50.5% or so. Closing above the upper first on this past 2 days is kind of giving me that picture. But on the other side of that, the upper first there is at 50% even. If that is lost, that would also be a daily turn down in Stoke. So that would favor a move back down to the basis and a high likely put in on the daily, which would coincide with, ETH BTC being in some pretty critical regions. 3-day, those 49.17% is nice and pointed up. Any closures above that upper first, and we're looking for a possible high test up here by the upper second at 50.73%, and quite frankly above there it's a breakout to go test 51, and then possibly the highs up here at 52%, and that wouldn't look good for alts. But remember, if Bitcoin is moving up, they're generally just gonna, Bitcoin's gonna be the first mover, probably the bigger mover. If it's moving down, alts are gonna get crushed. If Bitcoin dominance is going up and price of Bitcoin is going down, alts are probably going to get crushed, is what that's telling me. And if it moves up and Bitcoin dominance moves up, alts just aren't as aggressive as Bitcoin. 4-day, if this can hold out through tomorrow's closure, Thursday's closure, this would be a recovery of the basis band, again giving me that bias that it could go test 50.75%, and the 5 days also, which is going to close on Friday's closure. Of course, we'll talk about this again maybe on Friday if you remind me. And this is going to be that would be a basis recovery. Then again, we're looking to the upper first, which is around those highs at that 50.75% to the 51% up here. And even if it does put in a a high here locally, coming down to the lower first at like 49.34, even this low again, or the lower second, still going to be freaking bullish, man. Weekly as well. Really, man? 50.31% is going to turn the weekly up. What's the 5-day? 5 days already up. Yeah, this is it's looking like it wants to test up further, is what I'm trying to say there. And this could coincide with a bigger move to the upside for Bitcoin. It could also coincide with a pretty nasty pullback, all based on some of the criteria that we've been talking about throughout today, and the Bitcoin in 60 seconds videos, and the volume-based swing fail and continuation chart, all that stuff. So we have really clear criteria. I mean, below 26.9. I'm looking, 750 or so around the weekly for Bitcoin, and then stepping it down 26.6, 26.5 area, and then 26.4, 26.2 at that 50% on the daily. That 618 is at 26.5, by the way, remember that. And just to, again, show you how clean this lines up, when looking at the Bitcoin in 60 seconds chart that has all the fun stuff on it, we can get rid of the landy bands here, and we can, pull a fib from this most recent move, high to low, and you can see how everything's just lining up pretty perfectly here. And that's going to kind of be where I leave that. So let me go ahead and read the chats a little bit more here. We'll go ahead and go back to a 30-second degen chart here. Can't get enough degenning, as I saw many people cheering for this in some of the other chats, and then I bet you Bobby was happy about this as well. I see that he is here. Let me go ahead and look. Don, hello. Don, how are you? No name, how are you? Had to scroll up there. Cheryl, hello. Jedi, how you doing? Bobby is here. Yeah, it looks like the only ones chatting at the moment. Let's see what's going on. Jedi's being something about, he's complaining a lot about the weather and something like that. I mean, it is, you are in Europe, in the UK, I believe, so I'm assuming the weather is never nice there, especially in the UK. Talking about positions. All right, so here we got Bobby. Bobby says congrats. Jimmy's the coordinator for that stuff, but one of the people. Congrats to Jimmy too. I mean, he does a good job over there most of the time. What do you think of depth charts? You're talking about order book charts? Cheryl, you have to answer that for me. ETH has been struggling. Yes, I see. Thank you, Bobby. Must be referring to the dominant stuff. Yeah, Monday we'll take a look. Not sure what Bobby's laughing at, but I must have said something about the maybe it's the 30-second chart here. Excuse me. Sorry about the coughing. Yeah, Cheryl, let me know if you're hello. Roka, hello. Welcome. You'll have to let me know if you're talking about order book depth, if that's what you mean. Something like a trading light or a 30-second chart. Yeah, or there's various other actual order flow platforms as well. But when looking at what we've been deconstructing with the move down, with the volume based move down, and taking the high volume wicks and closes, and marking out the wicks on continuation, and then any kind of bounce, you mark out the wick and the close of the highest volume candles. That is basically deconstructing the order book. That's what you're doing. As those areas will, once we start to see a swing fail develop, it will regain one of those areas, and then those areas act as resistance and support on the mean reversion play. In this case, it was a downside move, and then you're moving back to the upside. I don't think that it's necessary to know or have any of the order book platforms. If you follow I think that it is redundant if you're following what I have been showing you with the volume-based stuff. Because you are essentially, even though it's price action and you're not getting order depth and you're not seeing, but the big thing is orders can be pulled. A trap is not always a trap on one side or the other. Sometimes it benefits you to not have that granular of information, so that you're not going rotational ticks and you got it wrong kind of a thing. Maybe the support levels were a little off, stuff like that. So, but there's plenty of different platforms. They're fairly pricey on a monthly basis, depending on the plans that you want to have with them. There's the EXO charts of the world. There are some free ones. You've got Trading Light, which is actually pretty affordable, but that's not really an order flow. That's more of a heat map for where liquidity is. And in this case, it's limit orders and stops, liquidation levels, stuff like that, which is typically stops. That's represented as stops. So that's, I don't think that if you're following along with the way that I'm showing you, I don't think it's necessarily worth the money unless you are going to be trading tick by tick. If you're going to trade ticks and you're going to be really getting into that, there's I would go EXO charts. I mean, it's a really good platform. One of the problems I have with it, it doesn't have enough, in my opinion, I need to see them put a spot, like a Coinbase spot in there. And I don't think they're going to be able to get the API for that. Maybe they will. We'll see. They've done great work over there. And they continue to do great work. And, I may at some point teach you guys order books and order flow. But I think that this is a much easier thing to understand when you see expansive moves down on higher volume, to deconstruct that volume based on wicks and closes and reversal points, to then define your swing fail patterns and or continuation for the way down. See high volume, it breaks either to the upside or downside. You're going to get continuation at minimum in the next few candles, right? So if this low breaks on high volume, this high volume low, no matter how it breaks, I mean, you're going to see continuation down, right? This high here, this higher volume high, once it broke on the close here on the 30-second chart, we got to move up. So we have the low to the high. We've got fairly low volume over here, but if you scroll left a little bit, we have higher volume. Breaking my computer. Actually, you know what? It's actually in a pretty, from the 30-second chart point of view, it's actually in a pretty even keel area for volume. If we go to the 15-minute chart, it'll be a little bit clearer. That highest volume wick is really the one to take out locally here, because the last highest volume candle was on the lows here at around that 26,650. And 15 minutes looking to breach this little consolidation, try to break out here. Coming into, I guess Jay Powell's probably speaking right now. So everybody's, oh God, Lord Jay Powell, pump our bags. Now, I will tell you, if this thing gets rejected at 28K, be careful, because it's probably going to retrace pretty hard. If it does break out, that's provided it breaks out of 27.5 or so, 27.7. If it starts to head up towards 28K into that daily overhead, that weekly resistance. So if it breaches the daily at 27.5, this is a 2-day chart, which would look nice if it breached there and closed above there. But on the daily, breach above 27.5 and 27.7. Clear shot to 28K to 28.4 to 6 or so. Now, granted, this is 28.4. That was perfectly tapped back here. Many of you remember this already. But if we were to see a rejection in here, just be aware that it's probably going to be a pretty violent sell-off. I wouldn't necessarily be looking for like a higher term time frame reversal, but if you do see price move in there, be aware of high volume rejections. And if it just kind of blasts on through, use continuation, higher volume. If it passes it on the high, then it's going to keep continuing higher. And then you define that criteria and create your zones on the way up. And the same thing that we did for this most recent move down, we will do for that move up. Does that sound cool? It's swing fail pattern. Just so you understand, Cheryl, this is a swing fail pattern down here, right? So if you want to take the wicks here or just the close open, that's a swing fail to the downside. This was a swing fail to the upside. That's all a swing fail is. Now, what we're doing with the 15-minute chart here is we are tracking volume that defines those swing fail and continuation areas. So just recall that when we're mapping this out, to the downside. That what we're doing is we say, okay, well, here's a higher volume. This was the highest volume that we'd seen since the consolidation low over here, right? So we have the volume that set this low of this range over here, and then we have this high volume rejection. Now, when we see this rejection and then this area gets passed, you see that we get higher volume coming in. We saw it try to hold up here after the high. It was just kind of like straight up and down on that hourly. Then it fails this area here on this candle. And if you go and look closely at this candle, this was the highest volume that we had seen since that range up there formed. So we mark it on a close because the wick didn't immediately get continuation after. So we mark the close and the wick. Next candle, we mark the wick, very high volume, and we get continuation, so no need to mark the close. Next candle, we get continuation, no need to mark the close, high volume on the wick. And then we get another area where we get a big high volume candle right here. We get continuation down on the next wick, but then we can mark the close once we see that we have a green candle. So we didn't get immediate continuation, went sideways. So we know that when this area breaks down below the close, and especially that wick low, we're going to get continuation down. We did get continuation after breaking this wick on a close, but there was a wick that held this low, so we don't need to mark this close because it's right on the wick. So we just get the next wick. We know that we're going to go test that wick low, and then we swung it. We did get continuation. We swung it, mark it on the close because the next candle came in green, and we mark its wick low. Nice high volume, and then it chops sideways for an extended period of time. And we know that when this wick low breaks down, we're going to get lower lows. Whether it's on a wick or a close, doesn't really matter. So we can see that price chops around here. It loses on a close, this close here. So we know that this wick's going to get tested. Gets tested, puts in a wick lower, so we mark that, and because it closed back in, we don't need to mark the close because it's inside of a important volume-based zone. It tests up in. It closes below this wick low again, so we know this wick low is going to get tested. And then it tests even lower. We can mark the close open because it did reverse on these next two candles. So close open, we know if it closes below that $25,307 that it will get a lower low. It bounces, regains the overhead resistance because this is all resistance now above. And that then sends price sideways for an extended period of time. Again, you can see after each level acts as resistance and support and so on and so forth. We get the nice little move up. And then we start losing these levels on the way back down. We know that that wick low, once lost, we start looking for lower lows. And we saw that it got wicked into. We marked it. Nice high volume. It bounced, lost it. So we're keeping... we're paying attention to this area. We did not get quite as high volume, but closed back in. So I could have marked this. I don't think I did for whatever reason, because there was a close in the very next candle, opened and then closed right on it. So we could just mark the close open to the wick low. We saw another wick below it, closed inside, came and messed around in here through a wick lower. Don't need to mark that because this was the important wick at 24,950. Wick came in at 24,900 exactly. Regains these levels. They all act as resistance on the way back up. So I think you get the point. Now I've reviewed this a lot, but it pays to have me go over it again and again for you guys. As some of you may zone out when I'm talking about it at other points, but then it starts making sense the more you see it also. So having me re-explain it for you is going to be beneficial. We can see that now we have some pretty high volume here on this doji in the past candle. If this low gets taken out, this higher volume wick low gets taken out on a close especially, it's going to go test somewhere around 27K, maybe more, maybe lower. So and you can just now the reason why I'm not marking the higher volume highs is because we are still in mean reversion. This is still a reversion back to the upside based on the move down. Once we see a breakout above, then I'm going to flip and take the move down off the board and mark the move up. So once we actually see a move up past the mean reversion point. And this is essentially, so far, mean reverted very close to where that previous move up to the 28.2 level was, at least on the wicks, 27.7 on the close. So just swing, fail, and continuation areas on the way down, going to act as resistance on the way up. Once you clear each level, typically on a close. Now you can mark this for higher term time frames as well. It's just going to take longer to play out. That's why I think the 15 minutes a good balancing point, because then you can drop down to the 5 minute and start to position if you see something going in the direction that you expected. But you know, I'd previously talked about this 26.9. There's just nothing in it. It's just what I like to call air in between. So you just 26.9 to 27.3 to 4 area, and then comes back down. 26.9 gets broken. 27.4. So hold support at 26.9, pop back up to 27.5, so on and so forth. So that does mean, right, closures above, we're looking higher. Closures below, we're looking to come back into these support zones down below. So you're welcome, Cheryl. There's a few others that were like, wow, that's really cool. Yeah, it's just deconstructing the order book, guys. That's really what you're doing. If you understand order books, you'll have a deeper understanding of why this works so well. But you don't need to understand why it works to understand continuation. And when you start regaining on mean reversion, that becomes a swing fail on those higher term time frames. So some people might call it order block tracking and like all this other stuff, and like fast move, false moves, and like all this other stuff. Like, no, I mean, you can have very reductive ways of talking about it, but I like to explain it so you understand why it works to the point that you can use it. If you understand order books and you're watching order flow, and it also is a way of tracking that without having to buy any of those platforms. You get basically the same look. You're just not getting delta candles, and you're not looking at volume profiles on each candle, and have the DOM over on the side tracking where orders are coming in and stuff like that. Which unless you're going to be doing butt in seat trading, it's not really needed. Like, we're looking at a 15-minute chart. Like, I don't need to be button seat unless I'm planning on playing positioning for a move, or otherwise I'm just alerting levels, and when they break I check on the chart, and if it meets the criteria for a trade, then I take the trade. All right, so I'm sure J Powell is probably still speaking. It's worth checking on J Powell. Let's look at let's see. J Powell, where are you at? Let's see.
To go further than we had.
He's
thought.
talking.
Back a year and what we
I can't hear what he's saying.
We wrote down. It's actually
I have to listen to my own stream to hear what he's saying.
We don't really know.
But yeah, his head is moving a lot. His hands are moving. His mouth is moving. I can't hear anything because I don't have the monitor turned on.
Now we're fairly
Turn it
close,
on, though.
we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need.
It's a whole lot of
to a
BS.
place where we're confident.
He's spouting BS.
We have a stance
That's what
that will
he's
bring
doing.
Inflation down to
I
2%.
really don't care what he has to say, to be
That's
quite
what we
honest.
need to get to.
We can
And
see what's happening
we're
over here.
Moving toward it as we've gotten closer to it. We've slowed the pace.
Not
at
much
which we
has
moved. I think that was
it's really
appropriate.
changed.
And now that we're getting closer, we have the ability to proceed carefully.
Yeah. Crude oil inventories for U.S. We've got that. Their economic projections. He's doing his statement right now. What else do we have? He's already in his press conference. Well, they released their statement. He's doing the press conference. And then next is just overseas stuff for me.
But need
Australia, New
another half
Zealand,
point
Great
of
Britain.
the funds rate on it. Does it tell you that? Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're going to
Now they're going to ask a whole bunch of softball questions. Yeah, we don't need to watch that. That's unneeded. Yeah, Bitcoin's probably going to chop around for a little bit. I would just be aware of any kind of breakdown below 26.9. Keep an eye on it. It's not really until we see a breakdown below this area here at 26,650 that 26,650 to 26,750, because it's right around that weekly. So if we got closes below the weekly again, then I am favoring, that would be a close below the lower first or the upper first standard deviation on the daily. Then I'd be favoring, a little bit more mean reversion down to the 26.5, 618 that I showed you. And then the possibly that 50%, which is going to be important for this particular move up, which is going to be that 26,200 that I've been calling out. So, yeah, I think that's going to do it. Unless you guys have any questions, any further questions. I'm not going to take too many coin requests today. We could check up on coins on Friday. Your BLZs of the world over there, buddy. Maybe we'll check on Solanas and stuff like that, but I'm going to wait till Friday. I want to see how the next day or two plays out. And then we'll get some requests in. So if you have things that you want to check on and you'd like me to take a look at that you've been tracking, get them ready for Friday so you can put them in the chats. I do have to go here pretty soon anyway. And got some obligations of things that I need to take care of. Yes, guys, I know. So with that, I'm going to say thank you for hanging out. I do appreciate it as always. Please subscribe if you're not already subscribed. Turn on the bell for notifications so you can actually get notified when the Bitcoin in 60 seconds shorts videos come up. If you do miss a shorts video, just go ahead to the page and or check the notifications. And then just click on the short section. It's always going to be under there. In fact, the live streams are going to be under the long form section. I'm going to get rid of the live stream category, as these are basically my long form videos. So maybe I'll do a little bit more produced content soon. We'll see. I definitely have produced content, but it's educational content. But in terms of technical analysis content, probably going to do some more produced stuff soon. We'll see headed into the fourth quarter how I'm feeling. Discord server update. It should be, we should have it live pretty soon. We've had quite a lot of problems with just the way Discord handles certain things in terms of allowing for malware checking from outside services. So we'll go from there. And I will hopefully have some more good news for you on Friday's live stream. And of course, as always, that all the content's free. So Discord would also be a free place to hang out. There will be some pretty strict rules in place because any kind of open server like that is bound to get scammers and spammers. So, but yeah. Any likes on the videos also do help. So go ahead and all the likes, all the social media stuff. If you can help me out, that will help me grow, which will help me give me more motivation. People actually watching. I just do this for the funsies, and it also gives me a good look at the market, a little bit more in depth. And you guys can bring stuff to the table too in terms of, show me what you're doing in terms of setups as well. And so you want to see me grow, go ahead and share stuff, like stuff, that kind of stuff. Yeah, and then we'll kind of go from there. So you guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out.